Welcome back and good afternoon. This is Sage live from the Kalkine studio and you are watching the Economic Corner show where we update you on all the biggest global economic announcements. And the first economic update comes in from the United States. US Treasury Secretary Janet Yellen said that yesterday rates may need to rise to keep the US economy from overheating. The comments by Yellen raised concerns among investors and led to a sell-off in the technology stocks. She spoke at an event hosted by The Atlantic magazine and warned on interest rate hikes in the context of Biden's plan of $4 trillion of infrastructure and welfare spending over the next decade. She also made comments of assurance later about Fed having the tools to control inflation if needed. Yellen also said that she expects full employment in the US by next year. And next up is news coming in on bilateral ties between the UK and India. The UK and India have outlined a 2030 roadmap to strengthen bilateral ties in key areas such as trade, education and defence. And London announced that the two countries had agreed investment deals worth almost £1 billion. A joint statement was released after virtual talks between UK Prime Minister Boris Johnson and his Indian counterpart Narendra Modi on Tuesday. The roadmap includes boosting economic ties through a new and comprehensive strategic partnership between the two countries. The package of commercial deals announced earlier on Tuesday comprises £533 million of investment into the UK from India that would generate more than 6,000 jobs in the UK. And British businesses have been granted trade deals within India worth about £446 million. The package will also include a £240 million investment by the Serum Institute of India into the UK health and sciences sector in order to provide additional funding for clinical trials, vaccine development and further research. And now for news from the pandemic recovery phase. Emergency medical aid is being sent to the pandemic-struck India from around the world. India is suffering a higher rate of coronavirus infections, with official records showing an average of 370,000 new cases and 3,300 deaths a day. Many experts estimate the true number is far greater. The White House has announced a support package including oxygen protective equipment and vaccine materials for India. The Indian Premier League is also suspended after many cricketers and staff tested positive for COVID-19. And moving on to important economic data announcements from across the globe. The Australian Bureau of Statistics released the building approval numbers for Australia. As per the report, the seasonally adjusted estimate for total dwellings approved rose 17.4% in March. Private sector dwellings excluding houses rose 63.6%, while private sector houses rose 0.1% in seasonally adjusted terms. The seasonally adjusted estimate for the value of non-residential buildings approved rose 59.4%. And next up are the latest numbers from the ANZ Commodity Price Index. The ANZ World Commodity Price Index lifted 2.3% month on month in April to extend its record high. The lift in the index was driven by stronger prices for beef, lamb, logs and aluminium. The global shipping costs remain elevated due to congestion at ports and strong demand for commodities. The Baltic Dry Index, a lead indicator of economic activity, shot up 49% in April. There are early indications that the cost of exporting goods from New Zealand to Asia may be stabilising, but it is still challenging to get product to market. And moving goods to Europe or the United States is even more difficult. And moving on to the labour market statistics of the New Zealand labour market, including unemployment and employment rates, demand for labour and changes in wages and salaries. In the March 2021 quarter, unemployment rates fell to 4.7% and employment rate rose to 67.1%. In the year to the March 2021 quarter, wage rates increased 1.6%, while average weekly earnings for full-time equivalent employees, including overtime, increased to $1,328.43. The average ordinary time hourly earnings rose to $34.52. As per the Financial Stability Report for May, New Zealand's financial system has coped well with the COVID-19 pandemic, but risks associated with the housing market are accumulating. And meanwhile, global economic and financial outcomes have so far turned out more favourable than anticipated in the early days of COVID-19. New Zealand's key export prices have been resilient, with dairy prices at their highest level in several years. However, supply chain disruptions and border restrictions have significantly affected some businesses. In parallel, substantial domestic fiscal and monetary policy support, along with successful public health measures, has helped to prevent many business failures and a larger rise in unemployment, which could have stressed the financial system. Next up is data published by the US Census Bureau. As per the data, new orders for manufactured goods, factory orders in the US rose by $5.8 billion, or 1.1% to $512.9 billion in March. And this reading followed February's contraction of 0.5% and came in worse than the market expectation for an increase of 1.3%. New orders for manufactured durable goods in March increased to $2 billion to $256.9 billion, up from the previously published 0.5%. The US Census Bureau and the US Bureau of Economic Analysis announced today that the goods and services deficit was $74.4 billion in March. And March exports were up at $200 billion, and March imports also rose and came in at $274.5 billion. The March increase in the goods and services deficit reflected an increase in the goods deficit and a decrease in services surplus of $0.3 billion. And now for numbers released from Canada. March 2021 marked the third consecutive month of record-setting numbers as building permits rose 5.7% to $10.9 billion, reflecting a booming residential sector. Constant dollar estimates are available for the first time and for the building permit series dating back to 2011. On a constant dollar basis, building permits increased by 4% to $8.1 billion, a number only surpassed by the April 2019 value of $8.2 billion. The residential sector climbed 15.9%, clearing the $8 billion mark for the first time in March. Multifamily dwellings jumped 24.5% compared with February to an unprecedented $4.3 billion. In March, Canada's imports posted a significant increase of 5.5%, while exports edged up 0.3%. As a result, following two consecutive monthly trade surpluses, Canada's merchandise trade balance returned to a deficit position, moving from a surplus of $1.4 billion in February to a deficit of $1.1 billion in March. For the upcoming economic events for the day, Indonesia GDP data will be released. Facebook is also expected to announce decisions on Trump's account. The social platform's oversight board will state whether Donald Trump will have his now suspended account reinstated. Thanks for joining us, and that's all for now, but do stay tuned with Kalkine TV for the major updates across markets, commodities and economic space. This is Sage signing off for now.